Here's how you can avoid 100% of your income taxes every single year. We call this strategy the paper loss strategy. In order to use it every single year, you have to understand the rules. The very first thing that I'm going to need you to understand is you're going to need to buy an investment property. When you buy a rental property, it could be an Airbnb or it can be a long-term rental. But as soon as you purchase the property, I want you to write off everything that's on the inside of the property. This could be appliances, bathrooms, tubs, cabinets. And when you write off everything that's inside of the property, it creates a big expense. We call this the cost segregation study. Once you do the cost segregation study, it creates a big enough loss to offset your W-2, your 1099, your stock, and your crypto income, making you tax-free.
All right. Yes and no. There's a few things here. Just because I buy an investment property doesn't mean I get to write it off against my W-2, because there's a couple things that are missing here. So in order to do this, you need to qualify for real estate professional status, or REPS, or the short-term rental loophole. You qualify for REPS by performing more than 750 hours of services and spending more than 50% of your working time in real property trade or business where you need to materially participate by being involved on a regular basis. For short-term rental loophole, you need an average stay of 7 days or less. So think about like an Airbnb. In either case, you need to materially participate. So yes, it's a powerful strategy, but it only applies to certain people who meet the criteria the IRS is looking for.